everyone. I'm Andrew Constantinides, an advisor with Jesani Wealth Management. And on the discussion of equities, considering that they are one of the core components of our multidimensional asset allocation strategy, I thought it pertinent to kind of discuss some of the strategies and methods that our team uses to identify potentially undervalued markets or potentially undervalued stocks or equities that we can then initiate either long or short positions into for our clients. Now, I discussed fundamental analysis, and this is kind of going to give some of the basics or the principles of technical analysis. But again, none of these should be used on their own. They should all be used in conjunction with other methods and not just the two. You also, want to look at the overall market, the market share that company holds within a sector, the management team of that particular company. But technical analysis can be used in really two ways. One, in conjunction with fundamental or other analysis, it can be used as a filter. So for example, let's say we're looking for undervalued companies that have a recent double bottom in their annual chart. We could filter out all the companies that show that formation and then conduct individual fundamental analysis on each one of those companies to determine the most undervalued position that we think will be the most profitable trade in the near future. The other way is you can, once we've done fundamental analysis and we've chosen the best in breed companies that we'd like to add into our models, we can then take a look at it and determine when is the best time to buy that. It's very difficult and very rare that you're going to sell a stock at the high or buy a stock at the bottom. But if there's momentum at play, which there usually is, it can be a good indicator on the best time and make the trade, get the most out of the trade and make it as profitable as it can be. But technical analysis really, there's two kind of key principles, or actually the market moves in really two key ways. One is either it's trending in one direction or the other, which could be up and down, or it's chopping back and forth and trading within a certain range. So one of my favorite technical traders is Linda Ratchke. She worked for several different hedge funds as the lead trader over the last 30 years, just a legendary futures and commodities trader. She now runs LBR Asset Management, and she always says that momentum precedes price. And what that means is that if you're looking to buy a stock, most likely the momentum is going to continue and determine the future price of that particular equity. So when a market moves in one direction, and actually I'm going to pull up a chart here. So this is a chart of IBM just going back 1 year. And typically the way that a market moves is you have a trend in one direction. I'm going to focus on this uptrend here in December of 2021. So you have a long move up in one direction, followed by another move in the opposite direction, usually within a more narrow range. So you can see you have a smaller move here, and then we have another move in the up direction. Now, it's not always the case that the preceding trends will be within a tighter range, but usually that's the case. It's one of the indicators that you can use. So right here, see where we have the top of this trend of IBM stock going up. This is called an impulse move, when we kind of hit a high or a ceiling of the stock, and then it moves in the opposite direction. So there's really two different ways that a trend like this can end for a stock. Here's kind of an example of where you have a lot of buying into the stock, the buying slows down, and then it just kind of rolls over, the market runs out of steam, and then the trend begins in the opposite direction. Or it can climax, like in this scenario here, where you have a lot of buying coming into the stock. Everyone is buying it at whatever price that it's offered at. And then all of a sudden, the buying stops, and it kind of creates a vacuum effect where the sellers take over and the stock quickly moves in the opposite direction. Also, one principle that I find very helpful to remember when I'm considering buying a particular equity is that there's a much higher probability that a particular trend is going to continue, then end and start a trend in the opposite direction. And when you kind of stand back and you look at a chart like this, it's quite obvious what I'm saying, that when you look at prior days trading, in most scenarios, that prior day, the stock moved in the same direction as the following day. So a lot of traders and all of us would love to go in and short IBM right here at the very top of its range, and then of course sell it at the bottom. But that's a very difficult strategy to employ because, again, the likelihood here, it's more likely that this trend is going to continue and that this stock keeps going up. We happen to have a reversal on this particular day and it went down, but that's usually not the case. So a better strategy is to buy into a trend after it is reversed, look at the historical chart and figure out how long that it's likely that that trend is going to continue. Now, in addition to kind of these basics, by the way, this is a candlestick chart that I'm looking at. Candlesticks are fantastic. I'll kind of briefly explain how they work. They were actually created in the 18th century by a Japanese rice trader. His name was Manisahama. So he wanted to determine what the future market prices of rice was going to be. So he invented these particular patterns. And I'm going to I'll use this one right here to explain what this is and how it works. So the body of the candlestick, which is the filled in green part here, is where the stock opened and where it closed on that particular trading day. Each candlestick is 1 day of trading. The green candlesticks are days when the stock closed higher than it did lower, and the red days are when it closed lower than where it opened at higher in the day. Now you also have, so you can see this on this day in January, IBM opened at this level and closed a little bit higher at this level. And then you see the tails in either direction. That is just the range that the stock traded in within that trading day. So it opened here, went all the way down to this level sometime throughout the day in intraday trading, went all the way up to this level, and then closed higher right here. This is actually basically a hammer. This is actually a very bullish formation when you see this, because you can see there was a lot of selling pressure that pushed the stock down, and then the bulls kind of just came in and took over, and the stock closed higher. And you can see after that, which happens quite a bit, when you see a formation like this on a day, the stock begins a trend to go higher. Now, in addition to kind of just looking at these overall chart trends, trend lines can also be useful, which you see here. Let me kind of slide over a little bit. So in this particular chart, you have a 50-day moving average and a 200-day moving average. So this line I'm following right now is the 50-day, and the lighter yellow line is the 200-day. One bullish indicator can be when a short-term moving average crosses over a long-term moving average, which here we see it right here actually with the 20-day. The 20-day crosses the 50-day, and the 50-day also crossed the 200-day here. And you can see in the near future, after that happens, we had a nice uptrend in this particular stock. Now, I can make some separate videos on other specific indicators that we use, like the exponential moving average, which is very important, the MACD, which is the moving average convergence divergence, standard deviation, some of the Bollinger Bands that we can use, also the RSI, or relative strength index. Here I think I have a chart actually where that's up. So here's some of the RSI can be very useful in determining a trend in a stock, and the MACD also in most charts, you'll see that down here. But I'll address each one of those in a separate, more detailed video. But this is just one of the many, many ways that we use to determine if a particular stock or sector in the market is undervalued. So thanks everyone for watching, and have a great day. Take care.